I think the broader point about geopolitics is pervasive. We're seeing that in different parts of the world, and it's something we're going to have to work our way through. It does raise, in many cases, the short-term level of volatility, and that's something that may affect markets in the short term, but doesn't mean there aren't interesting opportunities in China, as an example. I think China is a tricky one at the moment. The property market, while we're not seeing the big bazooka stimulus, we are seeing more moderate stimulus over time. That is going to take a while to work its way through the system. But the reason we're seeing these small pieces of stimulus is that the rest of the economy actually looks better than it did a few months ago. We've seen improvements in data. We've seen improvements in export data, as an example. And I think within this context, there are opportunities. We see strength in the industrial machinery complex, as an example. Truck makers that are exporting these diesel engines to other emerging markets, that's a great opportunity for us. The other example, construction machinery. While property in China is slowing, there's opportunities outside. So export markets, particularly in the Middle East, Saudi Arabia, for instance, are buying a lot of these construction equipment pieces from China. So definitely embedded opportunities within that market.
Right. Since you look at business development, obviously you perhaps have the best idea in terms of understanding whether or not clients are willing to commit capital to China. Right. Are they?
I would say it's been a tough few years, and China is a very sentiment-driven market.
We're talking about the tide changing.
The tide is changing. I think you're seeing a lot more interest, and it usually starts with the institutional buyer. And I would say since the end of last year, we've seen a fair bit of interest from the institutional buyer, perhaps trying to bottom fish in a little bit, but also bolstered by this data, the economic data that we're seeing that's turning positive. So people are seeing that tide changing. That's also on the other side, balanced by maybe some of the valuations you see in places like the U.S. and looking to rotate out into other parts of the world outside the U.S. So those two elements are probably driving some of the sentiment that we're seeing in terms of interest in China.
But when you have these conversations with, instos and the like, and, I suppose the dynamic then becomes, to some extent, which has become to some extent, what used to be ex-Japan is now ex-China, and right. You've got this opportunity in Japan or even India, for example, where sure. You have that tremendous upside potential without the headache sure. Of dealing with the geopolitics. Is that something that you're having to deal with as you're talking to clients?
Yeah, that's a really good point, Will, because we've got into this idea of lumping all of EM together, right? It started with the BRICS and then broader EM, assuming that everyone looks alike or looks similar. And now people are seeing and have been seeing opportunities outside of China. Yes, China is a big component, cannot be ignored, but places like India, places like Mexico, as an example, broader EM, if you're looking in the debt space, there's great emerging market debt opportunities in places like Latin America, Middle East, and Central Europe. So I do feel expanding your view beyond that pure China-focused view makes sense.